What is the difference in being pre-approved versus being pre-qualified for a mortgage? You're lying.
No.
I think we should just kick off with introducing you, who you are, and why you're here with us. This is Sophie. Sophie is can we tell where you go to school and what you're getting a major in?
Yes, I go to the University of Alabama, Roll Tide, and I'm majoring in finance.
We need to make sure to add a Go Vols in there at that point.
Hey, let's both beat the state of Alabama today. Go Vols.
Disgusting.
I would also just like to say the only reason that we support Sophie is because we're also licensed in Alabama. So I'm just kidding.
About the Roll Tide.
I also don't hate Tennessee.
Okay,
I don't.
Good.
Because I grew up here, so I
Good.
can't hate.
Yeah,
but
she's a Knoxvilleian.
I'm an Alabama fan.
Through and through. Don't hate it.
Don't hate is a double negative.
Don't hate it. Anyway, Sophie is our intern for the summer. And did you say that you're majoring in finance? Mm-hmm. Okay, cool. Which, might give you a leg up because today I'm going to ask you about some common to us in the mortgage industry phrases and see what maybe you think that they might mean. So are you, and I did not give Sophie any time to study. She has no idea what I'm going to ask. So, should we get started?
Yeah.
Okay. Sophie, what do you think that APR stands for?
Something percentage rate. Annual?
You're lying. Did you check my notes?
No.
Finance major right here. Dang. Okay. You know what? Those are like credit cards and stuff have APRs too. So that was good. That was a warm-up round. Good job.
This actually counts for anything.
Yeah, that one doesn't count. Next up. You're right. It's the annual percentage rate. So it's basically like the yearly cost of a loan.
Yes.
As it's like expressed as in the form of a rate. Okay. Good. Number 2, what is a fixed rate mortgage?
The rate doesn't change?
Pretty much. That's pretty much it. Yeah, that's pretty much it. It's basically a fixed rate mortgage. It has an interest rate that remains the same forever. So most mortgages are 30 years, and it means that if you keep that same loan for 30 years, that's your rate. Good job. You're doing a lot better than I thought you were going to, so great job. What is the difference in being pre-approved versus being pre-qualified for a mortgage?
Approved, somebody told you could. Qualified, you just think you can.
Wait, say that one more time.
So if you're pre-approved, somebody's approved you, but if you're just pre-qualified, like you didn't like go to someone, you just like know you can do it.
Ooh, that would be hilarious if that was the case. That would be like, hi, I'm here to buy this house and I can buy it because I say so. Is that kind of what you're saying?
Yeah.
Okay. I love that world. That sounds like a fun world to live in.
It's not totally off board.
It's kind of not.
It's pretty close to reality.
Really?
So a pre-qual is if somebody doesn't really look at your credit, but they listen to your income, they listen to what you say you have for assets, and they go, you could
Literally, don't even pull
you
credit.
could do this.
A pre-qual is basically like the lender saying, okay, if you're not a total liar and everything that you say is true, then you're good to go. Sure, go put an offer in on that house. I don't think I would want to put my name on that as a lender.
You can't. There is no letter for a pre-qual.
Oh.
Is there?
Do sellers take that?
Yeah, there's letters. You just shouldn't.
Oh.
Even worse.
And sellers take pre-quals?
If they don't know what they're looking at, it sounds like.
Shoo-wee. Nope.
Like, I mean, that's what like an online lender's gonna do. Here's what I make. Here's my debt. Here's my credit score. Sure. Here's the money I have in the bank. Here's what I want to put down. Okay.
I think it sounds good.
No questions asked.
But if you don't have that
Can't get a
credit,
loan that way.
if you don't have the credit score and you don't have the debts
Right.
figured out, you could go downhill quick.
Are we running this movie
Yeah,
or
sorry.
is this?
No.
I'm gonna cut all this out.
This is great. They can cut it all out.
Yeah.
This is great.
Kevin's like, says you.
Kevin's like, that is for the editors. Sorry, Floxy. Well, I think just to bring this back around, it sounds like a pre-qualification is basically just like taking, you're kind of right, taking the person who's wanting to buy the house, the borrower, like for their word, but the pre-approval is actually like going through and saying like, we confirmed your credit's good, your income's good, like all that stuff. Yeah, right? Okay, great.
Just a guess.
Just a good guess. These are really good guesses, actually. What do you think PMI is? PMI.
M, probably mortgage or something.
Really good guess.
I, maybe insurance or something.
Mm-hmm.
I don't know what the P is. Principal? I don't know.
Honestly, a really, really good guess. It's private mortgage insurance. And yeah, so it's what is required whenever you don't put 20% down on a home. So anything less than 20% down, you have to have private mortgage insurance. We won't dive into the details. They're not very exciting. That's for another episode. What do you think it means to refinance a mortgage? And can you maybe name 2 types of refinances?
I feel like it means you like go back and like redo. It's like you have a mortgage already, but then you go back and like kind of start it over.
Yeah.
But I don't know types of it.
That's okay. It is. You're kind of like, you are starting it over. You're kind of getting a new mortgage to replace the one that you had. And there's a few reasons why someone would do that. You hear a lot of people say, buy now, refi later. And that's because they've like, if you've got a higher interest rate and then the rates drop and you've got enough equity in your house, maybe you've got a little bit more money to put towards that principal, or maybe your house has appreciated a lot, gone up in value. I hope that wasn't one of the questions. So now you know what appreciation means, which you probably already did. Then it's basically replacing an existing mortgage with a new one, ideally with better terms. So, man, good job. You're basically a licensed loan officer. Good job. We'll just go ahead and give you your NMLS after this.
Are you smarter than a sophomore?
No, not smarter than a sophomore. What do you think that escrow refers to in the mortgage process?
Something to do with money, probably.
You know?
But I have no idea.
That's pretty accurate. Yeah, it does have to do with money. So an escrow account is basically an account that like holds funds for annual like property taxes and insurance, like homeowners insurance and things of that nature. So it like puts it in a little pot and then it distributes it throughout the year so that you kind of like don't really have to think about it. It just comes out with your mortgage. Okay. So not everybody does it, but it's just a nice thing to do just so you don't have to think about it. We did talk about something that was kind of the opposite of this. So what do you think an adjustable rate mortgage is, and how does that work?
Your rate changes every year.
Just like for funsies?
Or just it matches whatever the rate is that's going on at the time.
I mean, kind of. So,
the words.
The words.
I don't know about mortgages, but I know what words are. So
I would just like to say that when I first started this job, I would not be answering these as well. I'm also not getting a degree in finance, but yeah, no, it's basically a mortgage that has an interest rate that can change periodically based on the market rates. So kind of risky. Not a lot of people do it. There are situations where it's like really beneficial and can be like a great product. But yeah, most people don't go that route. What does LTV mean in lending terminology? LTV.
Lending Team B.
Lending Team V?
Yep.
Yeah, that's it. Let's go, Lending Team V. It actually stands for the loan to value ratio. So it's basically comparing the mortgage amount to how much the home is worth. The house is like appraised value. So that's their loan to value. So like if you put 20% down on a home, it's like your LTV is 80% because you've got 20% down. Does that make sense?
Yeah.
Sweet. We'll do a few more and we'll wrap this puppy up. What do you think amortization means related to mortgages? This is
supposed to know what this means. This was in my class.
Oh, I will not tell your teachers, I promise.
Thanks.
Except for when they see this on YouTube.
They're not going to see this.
You could send it to them.
No. Something with money.
Always a solid answer.
That's all I've got.
Yeah. Amortization is the scheduled repayment of mortgage principal and interest over the loan term. So fun fact, like most 30-year mortgages, when you start, like a big portion of your monthly payment is interest and like a little small portion of it is principal. And then over the life of a loan, they kind of cross and you start paying, like about halfway through, you start paying more principal than you do interest. And so that's kind of how an amortization schedule works. It's actually really sad to look at because you're just like, oh, look at all that money just going to interest. But at least you own a home, right? What do you think of balloon payment mortgages? Did you know that we play with balloons in mortgages? Any guess?
It goes up like a balloon.
Ooh, yeah, kind of.
That's all I don't know.
So basically, a balloon mortgage is like, it gives you like a really affordable set of payments for like a certain amount of time. So 3 years, 5 years, however long. But once that like period is up, it's pop, the loan is up and money is due and you got to pay for the rest of the loan in full. So kind of scary, just like you would be like if a balloon were to pop.
Yeah.
When you owe thousands of dollars.
Right.
Right. Yeah. Yeah. You could, that's the other thing, refinance before that balloon payment is due. A little bit of a gamble, but could be a smart move if you like refinance before that balloon payment or like before the term is up. What do you think a jumbo loan is?
This is my training videos
Oh, look
that
at
I
you.
didn't fully watch.
You totally watched them all.
Yep. Every second of every single one. All 440 minutes of each individual video.
Oh, yeah. Yeah, you for sure did. We can couple this
It's
one.
big. You can't put dependent something on it. I know that.
Good.
That's all
Yeah,
I got.
there you go. That's it. A jumbo loan is basically a mortgage that exceeds the conforming loan limits, which is $647,000. No?
766,550.
Oh, say that one more time.
766,550.
Duh.
766.
It's a round number.
It went up.
766, 550.
Okay.
That is how much money you can borrow to make something a conventional mortgage.
Okay.
Anything above that is a jumbo loan.
Okay.
Jumbo loans, they can be trickier, a little bit harder to get, higher price point, and it's based off of the loan amount, not the price point. And it is like you have to have like the qualifications can be a little trickier. Sometimes the interest rates are a little bit higher on jumbo loans too. Can you spell mortgage?
MORTGAGE.
That's a good start.
You got that. You got it. Yeah,
Thanks.
that T in there it's a tricky one, because it's silent. I also somehow always forget the first G. Don't know how. But we've been working on it. I think this is a good one to end this on. What does equity mean in relation to a mortgage?
Like the part that you actually like own.
Yeah. What if like you buy a house
Okay.
and then 5 years later that house is worth $50,000 more than you bought it 5 years prior, but you didn't put $50,000 in that house, it's just worth more. Do you think that new amount is also your equity? Like, is that your money?
Maybe part of it. Yes.
No, fam, all of
Question
it.
mark?
You get that. That's your equity.
There we go.
That's why we tell people, like, buy a house. Like, even if you can afford to, like, it's going to continue to appraise and make money for you in most scenarios. And why not? You're just basically, you didn't put that $50,000 in. It's just worth more now. So now you just got an extra bit of equity, which is just value, worth in your pocket.
Yeah.
Cool. I think you did a good job. Thanks. Yay. We should do this at the end of the summer and ask you harder questions since you're
Maybe I'll
so
know then.
smart. Yes.